Hey folks, welcome back to this edition of Ben's Bits. We're continuing our thoughts from last week's video about the traditional 401k being dead and why you should change tactics. Now, last week's video was a little tongue-in-cheek and really a setup for this week. So we'll be bringing a little bit of clarity in concluding that thought process. The point of last week's video was to introduce you to the idea that it's the way people invest the money that's in their 401k that may not be congruent with the desires of what they're wanting to accomplish. Because the approach that most people use is out of sync with what they want and using the resources that they have. And I know we've covered this logic before, but the theory holds true and the numbers speak for themselves. Most people are investing backwards because that's the way they were taught to do it by these so-called gurus. And it's the same gurus that are still operating on the world as flat theory. Now, I, of course, use this as an analogy of their thinking in an antiquated fashion because they're still teaching and telling people about strategies that worked yesteryear. And they haven't realized that the world has changed and the market has changed. Again, as I've said before, I'm not saying what they teach or what they say is valid or invalid. Although some of them, you really need to do your due diligence to see if they're really investing or if they're just teaching because they had success back in the early millennia and they're still riding that train because they're out there and they're in droves. But I digress. The point here is that you must look at your 401k as a resource you should be using to maximize your future so that you may want to apply different strategies that help move you towards that goal and as fast as possible with as much as possible. And then far beyond it because people are living longer and you need your investments to last far beyond your lifetime. Because you don't want to have to sacrifice in your retirement years either. You worked hard to get there, and you should enjoy it without the stresses that typically accompany that age group. Especially during that time period of your life, retirement should be looked at something with joy and happiness, not worry or being anxious about having enough to survive. So in order to grow your 401k and take advantage of all the tax ramifications associated with that retirement vehicle, you'll want a strategy that complements the velocity needed to grow it to its fullest. That's why we keep coming back to the idea of not having to have your 401k pull double duty, not having to replenish your capital and grow it at the same time. Unfortunately, you're like most people and you're unwittingly participating in it by utilizing antiquated strategies and eliminating it as much as possible. That way, your account can thrive at its fullest. Not to mention the fact that you could retire sooner because of that acceleration to boot. So that's it for this edition of Ben's Bits. Join us next week as we discuss mutual funds and the risk that you're taking on. And as always, thanks for watching, and we'll see you next time.